If you've ever entertained the thought of purchasing cryptocurrencies, you certainly aren't alone in doing so. According to the findings of the Pew Research Center, approximately 16% of all persons living in the United States have made an investment in some kind of cryptocurrency. If you have not yet dabbled in the world of cryptocurrencies, you may be curious about whether or not investing in a digital currency such as Bitcoin is a good method to generate more income. The answer is contingent on a number of circumstances, but you should be aware right off the bat that there is a great deal of uncertainty associated with investing in cryptocurrencies. Due to the high level of volatility associated with cryptocurrency transactions, certain personality types and those in particular financial circumstances are strongly discouraged against making financial commitments in this space. Find out if you belong to any of the categories of people who would probably be better off avoiding crypto so that you may save yourself from making a silly money blunder. These are why you should never buy Bitcoin or other cryptocurrencies. Individuals who carry debt on their credit cards. If you currently have debt, the chance of a large return from an investment in cryptocurrencies may appear like a straightforward and simple solution to get your financial situation back on track. Cryptocurrency, on the other hand, is associated with a significant amount of risk and does not offer a return on investment that is guaranteed. Consider using tried and true methods of paying off your debt, such as chipping away at it on a regular and steady basis or consulting with a non-profit credit counselor, rather than relying on cryptocurrencies to help you get out of financial straits. If you follow any of these strategies, you should be able to pay off your debts far more quickly than if you were to invest your money in some scam that promised instant wealth. Those individuals who do not have an emergency fund of their own. A survey conducted by Bankrate in the previous year found that 51% of all Americans do not have sufficient savings to last for 3 months without receiving work. Instead, over half of all Americans live paycheck to paycheck, which leaves them unable to deal with unforeseen costs such as arising medical bills or rent, as well as large increase in inflation. We can understand why you would go to cryptocurrencies given its reputation as a way to win big in the event that you are wanting to amass some more income that you can utilize to begin putting up an emergency fund. But in fact, if your paycheck is already stretched to the breaking point, you literally cannot afford to bet your hard-earned cash on something whose value fluctuates daily and unpredictably, and often wildly. This is especially the case if your paycheck is already at the point where it is about to break. Next, those who are getting close to retiring. If you have been putting money away for retirement via a 401 or a Roth IRA, you might have given some thought to diversifying your portfolio of retirement savings by purchasing cryptocurrency. After fact, the majority of elderly people are not able to survive solely on their social security benefits. It is easy to understand why the desire to invest in something risky like cryptocurrency, which has the potential for high returns but also carries a high level of risk, is so powerful. On the other hand, if you are getting close to retirement age, the savings you have been putting up will soon become your primary source of income. That indicates that now is not the time to put everything on the line. When you are getting close to your retirement age, many financial gurus recommend that you make more conservative judgments regarding your investments. Investing in a market sector that has the potential to suffer rapid and significant financial losses, as has lately been the case with cryptocurrencies, is a highly dangerous endeavor. 4. Individuals who are unwilling to take risks. Trading cryptocurrencies comes with a high level of risk, typically higher than the risk associated with investing in traditional currencies or stocks of companies. Furthermore, placing money in cryptocurrency markets is an order of magnitude riskier than placing money in a traditional financial asset such as a savings account or certificate of deposit. When you deposit money with the majority of banks, the Federal Deposit Insurance Corporation protects your account for up to $250,000 against loss. You are assured of receiving all of your money back no matter what happens to that bank. On the other hand, nothing is guaranteed to you when you deal in cryptocurrencies. You will not have a built-in way of redress if the cryptocurrency exchange you choose gets hacked, which means that your digital wallet is at risk of having its contents stolen. And because there are thousands of different cryptocurrencies, it can be difficult to decide which one to put your money into. This is especially true if you are a layperson who is unfamiliar with crypto and how it operates. Next, individuals who aren't familiar with cryptography. To suggest that crypto is difficult would be an understatement. To fully explain what cryptocurrency is, how it operates, and which cryptocurrencies have the highest return on investment would require a significant amount of time. It's never a good idea to invest in something you don't understand, but doing so with a product as unpredictable and unregulated as cryptocurrencies is especially unwise. If this sentence is the point at which you realize that there are more than 19,000 different cryptocurrencies, then hopefully it is also the point at which you realized that you should give considerable thought to whether or not you are knowledgeable enough about cryptocurrency to make an investment in it. Those who believe they may quickly amass wealth. Putting money into cryptocurrency markets could prove to be a profitable move in the long run. There is no way to predict what the future contains, but it is possible that in the long run, you will be happy that you invested some of your money in cryptocurrency. But placing your money in cryptocurrency with the expectation of becoming wealthy overnight is fraught with risk. The value of cryptocurrencies is prone to precipitous drops, as we have witnessed this year. Yet, because of cryptocurrencies are deliberately designed to be uncontrolled and decentralized, they come with the greater danger of being scammed. An investment in cryptocurrencies might be a worthwhile component of a broader investment portfolio that yields profits over a longer period of time, such as several years or even decades. Yet, Bitcoin won't likely make you a billionaire overnight if it's all you have to invest in. Lastly, individuals are not contributing enough to their 401ks for their employers to match their contributions. You are quite literally giving away free money if you do not participate in a 401k plan and make contributions at least equal to the amount that your employer will match. Research conducted by Aon Hewitt indicates that about 92% of US employers participate in the 401k contribution matching program. If part of your contributions are matched by your employer dollar for dollar, you will see a doubling of the amount of money you have in that section of your account. It would make use of that benefit offered by your employer if you are not allegedly doing so. In contrast to Bitcoin, building your 401k through an employer match is a reliable investing plan that comes with a guarantee of a return on your investment. Consider taking advantage of more stable money-making strategies, beginning with signing up for your employer's 401k match. Before you decide to take a drastic action such as moving your retirement funds into a cryptocurrency investment, this will give you more time to prepare for the consequences of your decisions. Every one of us daydreams about ways that we may swiftly eliminate our debt or save more money. But if you are at a stage in your life when you can't afford to take a financial hit, you should probably avoid investing in cryptocurrencies. Instead of throwing money at an investment with no assurance of a return, you should think about building your financial foundation with tried and true strategies such as updating your budget, considering gig work, re-evaluating your retirement portfolio, and consulting a financial counselor for expert advice. You can always refer back to the videos we have available to assist you with managing your personal finances. In light of this, could you kindly subscribe to our channel and ensure that the notification bell is turned on? Thanks!